For more on this topic, we talked to Kimberly Amadeo, economic expert for About.com, joining us live from beautiful Phoenix, Arizona, where it's also very hot as well. Kimberly, welcome to the Showbiz Asia America. You are the author of the Great Recession that you spoke about. Are you surprised at the speed of recovery that we have seen thus far in the United States?
Well, I am a little bit because it's been very slow compared to other recessions. At the same time, we've had two headwinds. Number one, it was the worst recession since the Great Depression, so you've got to expect a little bit of slowness. But the worst thing has been the government. There's been so many crises created by the government. We had the fiscal cliff, we had the debt ceiling crisis, on and on. It's really hampered economic growth.
There's been so much debate about Mr. Bernanke and what he did. Was it right? Was it not right? And let's just go back to what he did originally when the crisis took place. He reduced rates to essentially zero and pumped money into the economy. Did that help the economy? And if he didn't do it, what would have happened?
Oh my goodness, if he didn't do it, we would really be in trouble. I think between him and Hank Paulson, they did exactly the right thing at the right time in September 2008 by reassuring the financial markets, who were in a state of utter panic and going out the barn door and taking everything with them. If we hadn't had those two leaders at that time, it would have been much, much worse.
So fast forward to today, the discussion in the marketplace is about how will America unwind this massive stimulus plan. What are your thoughts on that?
Well, I don't think it's going to be a problem whatsoever. The biggest problem still is this recovery is still fragile. We're still at the low end of a 2% GDP growth. We haven't really broken above 3% in the last several years on a steady basis. And we need to see about a 3% growth rate to really start to hack away at unemployment. And that's what the main people on Main Street care about is jobs. On my website, I hear letters from people all the time saying, well, you say the economy is doing well, I still can't find a job. And that's what's really got to be corrected.
You talk a lot about your book about the economic situation. I just want to ask you a very simple question. Do you believe that government is helping companies grow the economy, or is the U.S. government getting in the way of corporate growth?
I think by creating all these crises, and I understand why they're doing it, there's a kind of a power struggle in Washington between two different economic political camps. But I think by creating uncertainty, that it doesn't help business. Businesses can plan for anything as long as they know what to plan for. And I think that that's why Bernanke is doing such a great job, because he very much is behind the idea or the concept of managing expectations. He wants to be very clear about what he wants to do. And he learned this from the 70s when the U.S. had stagflation, which was caused by stop-go monetary policy. He's very steady. He's going to tell people what he's going to do, and then he's going to do it.
The U.S. Federal Reserve has taken some shots across the bow from different folks around the world, from economists saying that perhaps the U.S. has done this right or this wrong. You know, as you look back on the different moves in the United States by the Federal Reserve, what do you point as the single most important step they take that's very different than perhaps how they may have handled the situation, for example, in Europe?
Well, number one, they kept interest rates low. I think Europe almost over-anticipated its recovery and kept interest rates high, which really started to lead to a recession. They were so worried about inflation, and I think some of that was because of Germany's problem with hyperinflation during the 1920s and 30s. They were so worried about hyperinflation, they overreacted. Whereas in the U.S., we've never had, well, we had hyperinflation in the Civil War, but not since then. And so we weren't worried about that. Bernanke accurately called it. He knew that if he hadn't done what he did and lowered interest rates, we would have gone towards another Great Depression. He was a scholar of the Great Depression, so that really guided his actions.
Kimberly Amadeo, insightful comments and analysis. Thank you very much, economists at About.com.